Good morning, everybody, and welcome to a brand new series that I want to start creating for my Twitter followers. And I'm going to be recording this on Zoom and then uploading it into YouTube. So you guys can go over to YouTube and catch up on my analysis for Bitcoin. Today is Tuesday, October 5th. And what I'm going to do, guys, this is my Bitcoin chart. However, as many of you guys know, I run a Discord group. And this particular chart here that I have for BTC is one that I update every single day with my group, but it's going to be very difficult to catch you guys up. So you know what I'm going to do? I'm going to start a fresh chart on a different exchange just so that we have a nice clean slate to work with, and we don't have it isn't so messy, especially if you're new to trading. It's very difficult to follow along when you have someone's existing chart and you have all of these lines, all of these different colors, and it makes it a little difficult to try to follow along and try to make sense of what's going on. I know I had that issue when I first started the journey down the rabbit hole of TA. So what I'm going to do here is I'm turning on my EMAs, and we'll go over Bitcoin's chart. However, I want to start off by saying that everyone views the market differently. And one of the things that you will notice that everybody has their own set of tools that they like to use. The sets of tools that I use that have worked for me, that I have come to find that they work for my style of trading, are the EMAs, as you see here on the upper right-hand corner, the 9, the 30, the 50, the 100, the 200. Using different EMAs doesn't mean that they're wrong. It's just that they have set up their trading style, their setups and their exits accordingly to the EMAs that particular trader chooses. No one's EMAs are right. No one's EMAs are wrong. It's just a matter of preference. I also like to look at the RSI and MACD. So this is basically my system. It's a very simple system. Is it always right? No, it's not always right. But as long as it's right more often than it is wrong, that's all I really care about. So with that, I wanted to go ahead and I'm going to keep this as simple as possible. As you guys know, I teach an informative, a teaching style type of analysis with my Discord. So I'm going to try to avoid doing that and just stick to the actual analysis of the chart. Now, with that being said, I'm not going to explain each EMA's individual function, but I will cover it briefly as I do the analysis. And hopefully, the more you watch, the more it's going to make sense why I utilize these particular EMAs and these particular tools to help me find a path, whether it's bull or whether it's bear or whether it's neutral. You'll understand with time how these EMAs help me analyze the market. All right, so let's do this. Let's start out with the hourly time frame for Bitcoin at the moment. So the hourly time frame looks good. We had a really nice push here on the first. Then we had a consolidation here for a few days. We came back, we touched the 100 EMA, and then we had a nice push to the upside. One of the things that I do like to see is the price action above the 9 EMA. A lot of support above the 9 EMA. I tend to notice that when it drops below the 9 EMA, that's when we get a lot of sell pressure on the price action. And obviously, it's not something that I want to see if I'm expecting more upside. The momentum indicator, the MACD, looks good. We are above the neutral zone. We are above the cross indicator. The volume oscillator is losing momentum at the moment, but you can see that here in the market structure as well, as we are coming down into the 9 EMA. RSI is strong. RSI is at 62 points. So definitely a strong indicator on the RSI at the moment. Now, the 4-hour time frame is giving us a very similar story. We had a nice breakout here of the 200 EMA, and you're going to notice me reference the 200 EMA as it is a very, very powerful area of resistance and area of support in almost any time frames. But one of the things you will come to understand when I view the market, the higher the time frame, the stronger these EMAs become, and the more significant the moves of the MACD become as well. So always keep that in mind. Different time frames are going to give you, a different view. However, the larger the time frame, the more powerful those moves become. Now, one of the things here about the 4-hour time frame that I do like I mentioned, is that we're above the 9 EMA and we are rising. We had a nice little bullish cross between the MACD and the cross indicator. We're printing in some positive volume here in the volume oscillator. One of the things that does concern me, though, is that we were underneath the 200 EMA for a while. I wouldn't say for a few weeks. However, when we broke through the 200 EMA, as you can see here, there's one thing that we did not do that I really tend to follow, and that is a back test. So a back test is something that's really, really important in my view when we're breaking out of any type of resistance, whether it be an EMA or whether it be just an old-fashioned support and resistance line. Typically, you see that. Now, I know it's one of those things where sometimes people have one bias or another, and in this case, if you have a bull bias, you think to yourself, "Oh, that'll never happen." You know what? It doesn't have to happen, but if you look to the left, you can see that we typically back test certain areas when we break out of. Let's just take a quick moment here, and you'll notice, especially on a 200 EMA, when we break above it, we usually come back down and back test it or consolidate. Would even have been a better price action for me to see is that consolidation. We didn't get any of that. Now, this price action is very different than this breakout that we just finished having. So let me do this. Let me just, for a quick reference, let me go back and look for a time where we broke through the 200 EMA in that same fashion with a nice big candle. And what happened? Did we come back and back test it? Look, this is a very similar, here's one. Here's a very similar breakout of that 200. And yes, the bulls are saying, yeah, no, we're not going to come down. This is all moon train from here. But eventually we do come back down and back test. We do come back down. So as bullish as I am, as an analyst, we want to try to find a case for the bears and a case for the bulls. In this particular instance here, I'm very bullish. I'm bullish overall. Whether the market structure is bearish or bullish, let me just say right now, overall in this space, especially going into quarter four, very, very bullish. However, we all know that this doesn't go just straight up. There's going to be a lot of give and take. That's just the way the markets work. So in between that, my bullish bias, I would say, my bullish outlook on the market, not really biased, but my bullish outlook on the market, I know that there's going to be times when the market is going to pull back. I love those pullbacks. That gives me opportunity to load up more, to buy more. If you are a trader, you know that you always want to leave yourself some capital to scale in and to add into your portfolio, and you take advantage, not here, but you take advantage here on these pullbacks. So it's if you have a bullish outlook, you should always be buying these retracements because you're looking for the big picture. Of course, if you are a day trader, it's a little different. The rules are a little different on a day trader because you're looking for that quick move to the upside before you get your next move to the downside. So you're not really looking at the 4-hour time frame. You're looking at the 15, 30, and 1 hour. But I'm trying to do an overall analysis, not focusing too much on just a day trader or a scalp trader, but on the overall look of the market, as most people are not day traders. They have secular jobs, they have responsibilities at home. They don't have the time that people like myself have to spend all day in front of the charts and scalp and day trade. So the majority of the people are looking to go into an asset, leave it there, and try to maximize when they can continue to scale into that particular asset, and obviously take advantage as the market moves up and you're scaling out, pulling profits along the way. However you deem is right for you, whether it be a stop loss or whether it just be a straight spot sell as the market goes up. Or one of my favorites is you wait for the coin to flip to 100%. You take a free position, you remove your capital, and you continue to ride that all the way up. Now, that's a very, very good way of doing pulling profit, as no one really knows how far this is going to go. And if you choose an asset, a strong asset like Bitcoin, Ethereum, BNB, Cake, those are never a bad idea to take a free position, because that free position, you know, is gaining in value. So you're not stuck holding something on a free position, even if it's a free position and it's absolutely doing nothing. The object of the game is to make money. There's no point in taking a free position in something that's going to go sideways for months, months and months or years and years, as you can utilize that capital into an asset that is making you money. At the end of the day, we're all here to make money. Well, most of us are. Some people are here because they want to hold for the next 10 to 20 years, and that's a whole different type of mindset. I am not in that mindset. I am in the mindset that I want to maximize my portfolio. I want to take as much profit as I'm able to, as the market is allowing me to, and continue to reinvest my capital as it goes along, rather than just holding for the next 10 years. So that's just a little backstory, guys, on how I view the market and what I'm looking for. So currently for the bull case, it looks good for the bulls. It does look good. We're holding strong. MACD is strong. In the 4-hour, we are right on that borderline of overbought. However, in a bull run, it is not out of the ordinary to see the RSI on these high time frames stay in overbought for days and even weeks at a time. So yes, it's overbought, but because it's an overbought doesn't mean it automatically has to come down. And one of the things that I look at for an overbought scenario or a momentum change, my favorite indicator is going to be the MACD. The MACD is going to give me, in my style of trading, it's going to hold a little bit more stock. It's going to give a little more influence than the RSI. So for the bulls, yeah, she's looking strong. I'm always going to be concerned about this area here. Now, on the 12-hour time frame, we have a really nice momentum to the upside on the MACD. But one of the things that I do look at as well in the MACD is the distance between the cross indicator and this MACD. It is separating. One of the things that you want to keep in mind is that when these two start to separate, the MACD will usually come back down and catch up to allowing the cross indicator to catch up. So as we separate here, I get a little bit more concerned. I get a concern that we're going to come back down and we're going to catch up to this cross indicator, which means that the price action as well is going to come down. Now, another one of my indicators that I like to look at is the distance between the 9 EMA and the price action. The further away she gets from the 9 EMA, the higher the risk that she's going to come back down and check it. And you're going to notice me reference to that more than anything in these next few weeks, few months, as you get familiarized with my style of trading, how important this separation is from the 9 EMA. Now, the videos that I'm going to be making for you guys are going to be very quick videos. This one's going to be a little bit more detailed because I'm trying to explain what I look at. Again, I'm trying to help you guys see what's going on in the market, but at the same time, I want you to kind of have in the back of your mind why I feel that something is bullish, or why I feel there's a lot of sell pressure and we may see some downside. And a lot of it has to do with these, these particular type of signals that I get from my tool. So again, I'm just trying to be very thorough in my very first video. It will not be like that in every video. It'll be a very quick 2-minute, this is what's going on. Hope this helps. Goodbye. What I do here with you on this video is what I actually do with my Discord, where I go step by step and educate people on exactly what to look over and over again on a daily basis, 7 days a week. But again, that is a very different format than Twitter. Twitter is a free format, so you're only going to get a very small portion of my time, and it's not going to be every day. I will try to do them as often as possible, but my main focus is always going to be those who invest in themselves, which is the people in my Discord. So the 12-hour time frame, I like it. It looks great. However, I'm concerned that we're going to be maybe coming back down here, not only catching up to the 9 EMA, but if you notice here, guys, this is an area of resistance. You see this area here, resistance, support, resistance, support. And look, we had a nice clean break. What am I expecting? A back test. A back test in this area, the same way that I'm expecting the back test in the 200 EMA on the 4-hour time frame, which lines up to the 100 EMA on the 12-hour time frame, which is this area here. And this particular time frame, we have the 50 and the 100 that converge together. So as these creep up higher, it's actually better for the bulls in the sense that it's less that she has to come down to meet the 100 EMA to basically back test it. So I always try to make a case for the bears and for the bulls. I never try to be, I try not to allow my bullish outlook to interfere with my bias, because you want to be as neutral as possible. You want to make a case for the bears and for the bulls. So the case for the bulls is that she is above any at the moment, any local resistance. However, this breakout usually signifies that we're going to come back down and test it. So 48,387-ish, around that area is what I'm looking for short term to come down. Now, it doesn't mean that this can't come up a little bit higher before she comes down. However, I'm going to be keeping that in the forefront of my mind. If she continues to go up, I'm going to make sure that I don't forget that we broke out of this area of very long-standing support and resistance, and we did not check it. If you look back here, when we broke out, we checked it. Here, we broke out, we checked it. So I'm not going to feel like this time it's different. I'm going to follow the same analysis that I used to the left in the past to what's going on in the present. So that's my analysis for the 12-hour time frame. The hourly time frame, very similar. She broke out of here. We haven't really come back to back test it. She is separating even further on the daily time frame from the 9 EMA than it was from the 12-hour time frame. So I am looking at one of two things can happen to close this space. She consolidates up here, allows the 9 EMA to catch up. However, in this case, because we are expecting a back test of this resistance line from this breakout, the more likely scenario is that she's going to come back down, find support on this red line, allowing the 9 EMA to catch up, and then she goes for another move to the upside. And obviously, if you look to the left, you can see where the next area of resistance is going to be. In this case here, I'm looking at the 52,688 area. As you can see here, this was an area of resistance. Now let's test that. Let's look here to the left. Was this area, was this line significant? Is this area significant to prior support and resistance? Now, I don't know. Let's take a look at it. Let's look to the left, follow the line. Yep, look at that. It was prior support, prior support, prior support, prior resistance, prior resistance, prior resistance. So you notice that, guys, whenever you see something like this, if you're looking just locally and you see something like this, easiest thing to do, again, is just draw a line and then figure out this doesn't happen by accident. There's always a meaning for all of this price action. The market tends to follow certain rules. And you know what? One of the rules is the most basic one is support and resistance. So if you learn to identify those, you'll understand what the next move of Bitcoin is going to be in, again, not in a certainty, but in a good probability sense. So once we resolve this back test, the next move for me personally is probably going to be this resistance area right here. Now, I don't want to continue to just project higher and higher. For right now, for the sake of this video, these are the things we're going to look for. And this way, it makes it much easier as I update you guys. They're going to be much smaller videos. We could follow the story a little bit easier than if I go into start looking to the left and looking for all, other targets. Right now, let's focus on the current. We've got two things we're looking at, folks, for the next video. Did we come back and back test this? If we did and allow the 9 EMA, once we do that, what is our next area of resistance? And it's going to be this. So my next video is going to be on one of two things. We came back and we back test this, or we actually went a little bit higher into this resistance, which means that there's, in my opinion, a more likely probability that we're going to be coming back down into here for that inevitable back test that we normally get. Not 100% again, guys, but it's something that I look out for, and it's something that happens more often than not. And the further we push up, the less bullish I'm going to be, in my opinion, until we resolve this area here. Of course, we could invalidate this back test by flipping this next resistance and confirming that. Then I could say, you know what? Okay, I'm not expecting this back test to happen as much as I am between here and here. It could still happen, but it is less likely, in my opinion. So I'm going to try to be, again, as neutral as possible, make a case for the bears and the bulls on the outlook of Bitcoin. One thing before I go, I want to look at the weekly time frame. The weekly time frame, in my opinion, looks really good. The strongest signal of momentum for me is the weekly. When the weekly looks bullish, it takes a lot for it to reverse that outlook. And currently, she's looking good. RSI at 56 points. MACD pointing up. Now, the MACD, just to give you a little bit, again, just a quick educational. When this is pointing up, the day-to-day fluctuations don't really matter, don't really affect the MACD. It takes a lot of volume. It takes a lot of movement to really affect the MACD in comparison to, like, say, the 1 hour time frame. This 1 hour time frame, if you watch the MACD, it's constantly pointing up, pointing down, pointing up, pointing down, because it measures it in the hour. The weekly takes the past 7 days. So you know that one day we can have a nice push to the upside of $300, and the very next day it'll come back down $300 or $400. Those movements are not going to affect the weekly. The weekly is going to take the past 7 days movements. And right now, she's looking really nice. She's above all EMAs, has a nice flag pattern, and is moving up. Here's a case for the bears and the bulls. For the bulls, nice flag pattern, obviously coming out with the breakout. I would be doing a harmonic pattern. We will get into that once it's confirmed that she's breaking out. Then I can go ahead and give you some areas of interest that I'd be looking at. And a case for the bull and a case for the bears would be a potential double top in this area here. However, I'm not leaning towards a double top personally, because there's more to a double top than just a market structure here. You have to look at the overall market. Are we in a weekly bearish, going into a bearish scenario? I don't believe to think so. Now, there are traders out there are analysts out there on Twitter that you may follow that have been calling for the end of the bear market, the end of the bull market. It's coming, it's coming. Yeah, eventually it's coming. I do believe that these work in cycles. I don't believe now is the time. And they may be right, and I may be wrong, but for now, I'm going to give you guys my point of view. Unfortunately, there are people that do stick to a certain bias, and you'll notice that. You'll notice that people that are always bearish will always post the majority of their charts on weeks that we see these. And when we're going up, if you look at their feed and you look at the timeline, they don't say much. That's usually somebody who has a bias that they cannot seem to overcome. They only have one outlook. And there's a couple of people that come to mind, and I'm not here to call them out, but I don't have to call them out. You can just tell by their tweets and when they tweet what their bias actually is. They don't have a neutral outlook on the market. They just have one outlook on the market, whether it be bearish or whether it be bullish. Those are some of the signs that I normally typically look at for people who have a one side, who are biased for either the bears or the bulls. There's a lot of good analysts that will give you both scenarios. There's a lot of some of my favorite analysts that I like to look at, and I look at their charts and look at their videos, and I respect very much, and I've learned from them, are people like Nebraska Gooner, Chonis, Income Sharks, Cobra Trading, my boy Castillo. There's a lot. I can't name all of them off the top of my head, but those are the ones that I see a lot on Twitter. So obviously they stay in the forefront of my mind. But those guys are really, really good. Credible Crypto, another one. He's been a rock star with HBAR and with XRP, posting really good charts, a lot of information. So those are people that I try to pick up certain traits that they use, certain indicators that they use to help benefit my trading. Guys, this isn't a competition. Okay, you have to remember that this is not a competition. This is a team effort. We're here to make money. The only competition there is between us and the financial system, us and the old world boys club that have been keeping us down for a century. That's our competition, not us. I don't know why on Twitter we need to argue amongst each other on which project is better, instead of just saying, hey, you know what, guys, that's a great project, but take a look at this one. This one has a lot of potential. We're the only space that does that. When I go to Wall Street Twitter, I don't see them saying, hey, your Amazon sucks, you should just be buying Google. No, hey guys, Amazon looks like it might take off, might be a good idea to buy some right now while it's down. Hey, Microsoft, and it's a very, very different, non-competitive, they don't marry their stocks. Only in crypto do we marry our coins. You can be enthusiastic, but you should also have a very open mind to the possibilities that there are other coins in this space. And remember, guys, there's always going to be the coins that are going to give you the highest risk to the lowest risk, and everywhere in between that. So be careful when you marry coins based on promises rather than on actual use case. We are in a very, very different a place in crypto than we were 4 or 5 years ago. When I got into it in early 2017, there was nothing but white papers. There was very, very little use case. For those who don't understand what a white paper is, it's basically a promise that the project would make on what they plan to do and how they plan to implement it and what their projection is for the future. Back then, very, very little projects actually did something. They were building. For you new folks that are in this space, you're very, very lucky. You have a lot of projects that are actually doing something. For instance, layer 1 protocols. Those are actual use cases, which means that other companies are using their protocol similar to like Amazon Web Services, like Netflix, for instance. Netflix didn't build out their entire protocol. What they did is that they leased the format from Amazon and they use Amazon's foundation. They used layer 1 to build their product, similar to how many coins have built their projects on top of Ethereum until they either do one of two things. So other layer 1 protocols had to start somehow. They wanted to become an Ethereum, but they said, hey, in order to do that, we need to start somewhere. So they said, hey, we're going to build it on Ethereum, and then we're going to have our own mainnet. We're going to have our own layer, our own protocol come live on a certain year, and then they switch off of Ethereum and they go to their own layer 1 protocol, and that's how they basically are trying to become what Ethereum is. Now, I'm not here to advocate Ethereum. I'm just trying to help you explain, help you understand, better said, that there's a lot of protocols that are going to be layer 1 that are going to have use case. Use case is one of the things that I look for when I'm going to invest. I'm going to trade into put my hard-earned money, because they're going to have a lot better risk to reward versus something that just came out to the market. So you got Ethereum, you got BNB, Sol, Cosmos, Dot, Luna. Those projects, they have already been through the white paper stage, and they're in that layer 1 category that I'm looking at. So again, this is my personal opinion. If you want to risk your hard-earned money on a coin that just came out because they promise it's going to be the best, that's you. That's okay. If you lose it all, that's on you. It doesn't affect me whatsoever. What you trade has zero effect on my bottom dollar. I'm here to help you. If you want to accept it, great. If you don't, that's fine. We all have to learn somehow. And I tell this to all of my students, the best lesson that you're ever going to have is when you lose money. There is no better lesson. I could tell you till I'm blue in the face what not to do. And a lot of times it'll go in one ear and out the other. However, when you do the opposite and you lose money, that's where it hurts. That's where you get that feeling in the gut of your stomach. That's when my words are going to resonate. And whether you want to admit it or not, you're going to be, he was right. I shouldn't have listened. I shouldn't have bought the top of that candle after it ran 100 to 300%. I should have waited for a pullback. I should have waited for a back test. I should have waited. So those type of situations we all have as traders. And guess what? Even experienced traders, we sometimes get it wrong, and that's okay. But we're here to try to help you not follow those same types of losses and trades that we did, and try to make you a better trader. However, for some reason, people still want to backlash when you try to help them or when you try to give them advice. So, you know, that's just Twitter. So hopefully, guys, this video helped you open your eyes into certain things that you might have missed. Again, these videos are going to be very, very short. They're not going to be detailed. But since this is my first one, I wanted you to understand my mindset, how I think, what I look at, what I like to invest in, so that when we move forward and I analyze coins, you understand, well, how come he's always talking about Bitcoin and Ethereum? He doesn't talk about XYZ coin. They're only worth a fraction of a penny, and they have a potential to do a 100,000x. Yeah, those are great. And I've seen coins do $10,000, 10,000% in a very short time. That isn't where that isn't where my mindset is at this point of my career. In my trading career, that's not what I'm looking at. Do I play those? Absolutely. I absolutely play those coins, but they're not my priority. They're something that I will throw a few bucks at. If it goes, great. It's awesome when that happens, but they fail more often than they actually succeed. So when you put a little bit of your money in there and it fails, not a big deal. But where I'm at in this stage of my life, I really want to go for that security. Bitcoin layer 1 protocols are my go-to. They don't have to be yours, but they're mine. And if you enjoyed this video and you want to hear more and you want to keep track and hear my analysis on Bitcoin moving forward, hit the subscribe button, hit the bell button so you're notified when I have a new video that comes out and you don't miss it. Or you don't have to. You don't have to. If you don't enjoy it, you don't like it, hit the thumbs down. No big deal. Again, it doesn't affect me whatsoever. I'm here to help you guys. If you want more in-depth explanation on how to utilize these tools, what I look at, and there's a lot more things that I also teach, check out my website, my Discord. If it's for you, if it's not for you, no big deal. There's a lot of free information. You do not need to pay somebody to learn how to trade. Let me get that right. When I first started, I did not pay anyone. I learned quite a bit on my own. However, did I ever pay somebody? Absolutely, I paid somebody. I needed help just fine-tuning what I thought was the right way. And some of the stuff that I learned on my own, I still use to this day. And some of the stuff I had to tweak it, because I would pay my first paid instructional group that I got into was the chart guys. That was my first guy, Dan, and the chart guy. He was by himself at that time. He had no really. Now he's got a team of people. Great. I still listen to him from to this day. I still listen to Nebraska Gunner, Chonis, Vamp. There's a lot of people that I listen to. Michael, Crypto Michael, great analyst. Because you never stop learning. You don't want to stop learning. You're going to continue your education. If you are a real trader, you will never say, I know everything. A real trader never stops learning. A real trader never stops improving. And a real man will admit that. Just keep that in mind. Let that sink in. Do I want to come here and act like I know it all? Absolutely not. I try to listen to other people's videos and analysis so that I can learn something. Why? Because I want to make money. I don't feel like I'm in competition with them. I'm going to give them credit. If you made me money, why wouldn't I say thank you? Why wouldn't I be, hey man, thank you so much. This is something that I learned that I didn't understand, or I neglected to grasp the importance of, and now it's helping me to make money. Thank you, man. I appreciate you. But unfortunately, in this space, it's very different. We don't see a lot of that. So again, guys, if you want to learn how to trade, do it by yourself. Go to YouTube, and you could another good instructional place that you can go that's free. There's a lot of them. Crypto Wendy O has a great show and crypto news on the market. She also does TA. She also introduces a lot of coins that are coming out. There's a lot of great information that you can pick up on YouTube. You don't need to pay somebody. But if you get to a point where you think you need that extra help, come check me out. See if you like it. Try me for a month. If you don't like it, all right. You invested a very little, and hopefully you got something out of it. I don't think there's ever been somebody who's been in my Discord who hasn't wanted to apply themselves, who said, I joined, I listened to your videos, I listened to all your modules that you have on, and I didn't learn anything. I've never had one of those. Now, don't think you're going to come into my Discord and you're going to instantly know how to trade. That's not how it works. It takes years of repetition. That's what this is. Repetition, repetition, repetition. Like any trade out there, it takes time and repetition and a lot of time and a lot of repetition to learn a new career, to learn a new trade. But in my opinion, it's definitely one that merits my time, and it should merit your time, because it's, in my opinion, it's life-changing. What we're doing here is going to change your life and the life of your loved ones, the life of your family, and it's going to hopefully improve your life. If it isn't going to improve your life, then you shouldn't do it. Don't do something that's not going to improve your life, because if not, what's the point? Life is too short for that. All right, guys, have a really good day. And I will try to make time this week to update you further on the analysis that I gave you on Bitcoin. Or if we do one of two things, if we go to that next resistance, I'll do a video. And if we come back to do a back test on that area that we talked about in the beginning, I'll do another video so that we can follow along every step of the way as Bitcoin either goes up or either goes down. We can follow the story together. Have a good day, guys.